And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott Wave update for the NASDAQ 100 for Tuesday, October 5th, 2021. A very surprising day in terms of the intensity and the direction and the amount of coverage. And so the size of the moves caught me off guard. And I was not anticipating it. But after trading it, I needed to step away. I needed to really take a look to see what was going on, and then just putting some mitigating factors into it to realize, okay, it does fit. So I am going to entitle what we're going to be talking about tonight is sort of like anatomy of a trade, because it really took place in that first 10 minutes. And so many things happened that I want to do an anatomy of a trade. So it's going to be a lot of trade talk. That's what's going to happen. But I want to quickly go over that I've not changed my mind. And the market continues to really act as it should in the particular structure that it's in and what it's forming. And I want to go into just a little bit about that. Big picture, or at least as big as what I'm working on right now, is that we are in an intermediate degree decline. And whether this is wave A, wave B, and we're finishing up a C, or we're moving in through a C wave, or whether it's 1 and 2, or we're moving lower in a third wave, both carry the same consequences. Both carry the same characteristics. So the wave that we're doing continues to fall into either view that, so it still fits, requiring additional downside. That should be pretty strong and nasty, et cetera, et cetera. So that all remains the same. Now, within that intermediate third wave down, there's going to be 5 waves of minor degree. There's minor 1, minor 2. I'm keeping those in place, even against what we did today. Then we start to decline. We had yesterday, we had plenty of downside acceleration. Everything fit perfectly. Take a snapshot. It was a good picture. But then it rallied. And I felt, okay, if it's just 1 of 3, this is going to be 2 of 3. I was not expecting it to go soaring above the 20 and the 50 as if they had no meaning and presented no threat to them stepping in as buyers. So the intensity of the buy is what really happened right at the opening. And we ended yesterday with some, I believe, new money coming in. So what I mean by that is like 401k money, it gets placed usually at the beginning of the month. Redemptions become at the end of the month, et cetera, et cetera. So we've got these factors that do come in on both sides, and it's all position squaring is really what it ends up being called. Nonetheless, yesterday, we did see some fairly strong buying right up into the close after creating a low, creating a low before noon. Then we continued to follow through on an Elliott pattern that I felt needed a little bit additional upside, and I thought it would hold where the 50-day moving average was at the time. So it was really about right below here, 581. Well, it blew through that on the second salvo today, just kind of took it and ran. And that caught me off guard. So the height of this, but under Elliott, and even Robert Prechter writes about it, that second waves are wonders amongst themselves in that they can really take back everything that was taken or produced unlike this. And so really this wave is correcting that wave. But for whatever reason, end of the month, new money, whatever the reason, that marked a tradable low. But a wave 2 can really zip all the way back to here. And still, be considered a wave two. It just cannot exceed 14,835. Above 835, it's not a wave two. Then I'm going to have to consider ABC, and it truly is something totally different. It's a B wave. It's going to be involved. It's going to go much higher. And I have to be able to consider that. But I have to give the benefit of the doubt right now to the count as is. But we don't have to wait all that long, nor do we have to trade foolishly. So again, trade smart, and that's going to come in anatomy of a trade. So I'm leaving this as a 2, this is a 1, this is a 2. Here's the deal. What the market needs to do is to begin and continue to fall. Right now, they're buying it up. That doesn't surprise me. If I go all the way down, let's look for this to maybe get up to 673, maybe as high as 682. This particular little folly that they're doing. But it does appear, and I'll get to that real quick, that it should be a little corrective and we get another new low below what we did into the close. Then that's going to produce on this shorter term charts, like the 30 and the 15-minute, it will produce 5 waves down. So we should get an additional leg down no matter what. All right, so I think it's a wave 1, and then we're going to get a wave 2. And I'm hoping we can mark it here. It cannot come above there. Above there, we trade smart. We trade what is in front of us and what truly the market is dictating as the trend. Not Michael, not anybody else. The market tells us. And it's going to let you know real quick on the intensity. Okay, so I'm going to leave that there. My expectations for tomorrow, there's my marker. This count remains intact, and unless we get a break above 14,840. If it breaks above there, I'm going to have to nullify it, and this will be an ABC, and we're going to do a B wave, and then an additional C wave. This all takes time. Corrective patterns are complex. So I am going to leave it here and keep this video on the short side, and I'm going to do another one that's going to be entitled Anatomy of a Trade, and that's the one we're going to break down what took place this morning and how it affected traders and how it affected those trading with a small account. So for tomorrow, guys, I think that if the rally does not contain here and this cannot contain below 14,840, then we got to trade what's in front of us, continue to trade. There will be rallies, there will be declines, but it is not going to be what I'm expecting right now. So we may have more upside to put in and another little drop, another little rally, and then we get that larger decline. So this all could be being put on delay and not going to happen now. That's the main message. No, the count's not wrong. No, the market's not wrong. It's being able to interpret it into what it is. The entire move, again, remains corrective. Even if this thing rallies back to 15,500, it's still corrective. It's a corrective bounce before we get the next shoe dropping. No matter if I'm counting this as 1, 2, 3, or if I'm counting this as ABC, this B wave will be deceptive. If it's an ABC, this B wave will be deceptive and can get all the way here, can get higher. So these are the things that we need to just be prepared for. And it doesn't make any difference what I think. It's like being able to track and trade where the market is going and why. You know, what limitations do we put around it? How do we want to trade it? These are the important factors. So it doesn't make any difference if you're right or wrong. What makes a difference is, are you going to be able to trade it? So that's why I'll give you that point right there. And then guess what else sits there? The 200-day moving average, the hourly 200-day, right there. A break above that is going to create a little bit more havoc. So you got to be aware of these things. This is what happens when you break the stronger moving averages that should provide either support or resistance. In this case, resistance. So things to keep in mind. If it's contained and it turns lower, then we'd be looking for it to break back below the 50, below the 20. If that happens, I would suspect that it's going to trigger algorithms to start selling. So keep in mind, moving averages are being used and they're put into algorithms. So these things just happen. That's what the computers are programmed. And that's why we got acceleration early today when it broke above the 50. Boom, go. And they just took it higher. and they needed your money to do it. So if you were short, you got screwed because you had to cover. And it happened on both sides. You know, it happened, sellers came in and you were long, thank you, they needed the money. So they took it from them. That'll come in Anatomy of a Trade. I'm going to finish it here and then start the next video, which will just show up as a second video, and it will be entitled Anatomy of a Trade. Okay, so tomorrow, you know the break point, and above it, we're going to trade smart. If not, it's going to start to drop. If it breaks below here, I look for a little bit more acceleration. We already have levels. These are levels that I'm looking, if indeed this is going to continue and the market's going to drop. This is what I'm looking for. If it fails to do it, then it is what else I'm telling you. It's going to break above here. That's not that far to have to wait for a major move. So a break above there, that move, the serious dropping, will be off. We'll have to deal with serious buying. Same trade, just in a different direction, and you want to play it. All right, I'm leaving it there. The next update will be on Wednesday, October the 6th.